Have you ever tried reading a financial statement and felt totally overwhelmed? Don't worry, you're not alone. Financial statements can seem like a foreign language, but today I'm here to break it down so that you can read them like an expert. By the end of this video, you'll have a clear understanding of the balance sheet, income statement, and cash flow statement, and you'll know exactly what numbers to look for. And hey, if you're serious about mastering this skill, be sure to check out the video description after watching. I've included valuable resources to help you continue your journey and build your financial knowledge. So, let's dive in and get started. First, let's talk about the types of financial statements you'll encounter. There are three key ones to know. The balance sheet, which shows a company's assets, liabilities, and equity at a specific point in time. The income statement, which tells you if the business is making a profit by showing revenue and expenses over a certain period. And the cash flow statement, which details cash coming in and going out, giving you a picture of liquidity and cash management. Understanding these three can give you a complete view of any company's financial health. Let's start with the balance sheet. This is like a financial snapshot taken at a specific date. Think of it as showing what a company owns, what it owes, and what's left for the owners if all debts are paid. Here are the main parts. 1. Assets. This includes things like cash, inventory, and property. They're usually listed by how quickly they can be turned into cash. 2. Liabilities. These are debts and obligations the company owes to others. 3. Equity, also called shareholders' equity or owner's equity. This represents what's left for the owners. A common metric to remember is the equation assets equals liabilities plus equity. Next up, the income statement. This is all about the company's performance over a period, like a month, quarter, or year. It starts with revenue or sales, how much money came in. Then we subtract cost of goods sold, COGS, which gives us gross profit. After that, we list operating expenses like salaries, rent, and utilities. Finally, we end up with net income, or profit, which tells us if the business made or lost money. This statement is key for understanding profitability, and it's where you can see if the business is efficiently managing its resources. The cash flow statement is the third main financial statement, and it tracks cash moving in and out of the company. Operating activities. This section shows cash generated or used by core business operations. Investing activities. Here, you'll see purchases or sales of assets, like equipment or investments. Financing activities. This includes cash from issuing stocks, paying dividends, or taking out loans. Think of this statement as showing how the company funds its operations and manages cash, critical for assessing liquidity. Now that you understand the basics, let's look at a few quick metrics that can help you analyze financial health. Current ratio, found by dividing current assets by current liabilities. This shows if the company can pay its short-term obligations. Gross profit margin, calculated as gross profit divided by revenue, which shows how profitable the company's core business is. Debt-to-equity ratio. This compares total liabilities to equity and helps you understand the level of risk associated with debt. Net profit margin, found by dividing net income by revenue, telling you how much of each dollar of revenue actually turns into profit. These are just a few metrics, but they give you a snapshot of stability, profitability, and efficiency. While reading financial statements, watch out for common red flags. These might include consistently declining revenue or profit, high debt-to-equity ratio that suggests excessive leverage, negative cash flow from operations. This can be a sign of poor cash management. Identifying these issues early can save you from risky investments or warn you of potential financial troubles. And that's it. Now you know how to read a financial statement like an expert. I hope this breakdown of the balance sheet, income statement, and cash flow statement has given you the confidence to analyze financials with ease. Remember, practice makes perfect, so keep applying what you've learned here. If you're ready to take your skills even further, be sure to check out the video description below. I've included some valuable resources to help you continue your journey, including a free financial statement checklist and more in-depth guides. Thanks for watching, and don't forget to like, subscribe, and share if you found this helpful. See you in the next video.